Hello, everyone. Thank you so much for joining us again for another weekly wrap-up. My name is Jeremy Kronemeyer, Operations Manager for Wickham Financial Group, and I have Graham Wickham here, President and CEO of Wickham Financial and Insurance Services. Graham, what happened in the markets last week?
Yeah, thank you, Jeremy. Thanks for our listeners jumping on the call. I hope everyone had a great 4th with family and friends, hopefully a safe one. Had a pretty good surge in the market overall in the indices. So we saw the Nasdaq up about 3.5%. We got the S&P up just under 2%, 1.9. But the Russell 2000, that small cap index, that was the one that fell. That was off about 1.3%. So I know this won't be a huge surprise to everyone, but we did see technology lead. That was the biggest outperformance of 2.9%, followed by communications, consumer discretionary, financial staples, utilities, all advanced. Did see a good or decent pop over in oil with some hurricane concerns in the Gulf of Mexico. That was up about 2%. At the same time, we did see the yields moderate a bit, with maybe some speculation that the Fed's shifting more and more to a dovish stance, meaning that maybe moving away from a pause policy to closer to a lowering policy for Fed funds rate. If we look at the non-payrolls, they jumped up about 206,000. If we go to the unemployment rate, that stayed pretty steady at about 4.1%. I think we got to get up into the 5 range before, or even over 4 here. That could be concerning to the market, but we need probably that unemployment rate to continue to move up within an appropriate level, so we don't look like we're tipping into a recession, but at the same time, we can bring inflation down. If we go overseas, we'll look at China. If you look at their PMI, that eased to about 51.2 from 54. And in Germany, we saw the industrial orders fell unexpectedly in May. Now, looking at this week, pretty interesting. We're starting to get into earnings season, but we still got to deal with the French primary election, some of the ramification of that happened over the weekend. We'll be looking at consumer credit reports. Fed chairman's going to be having a testimony, so he'll getting the grill from the Hill, if you might. We'll see the inflationary data coming out on Thursday. Friday, we'll be looking at the PPI and CPI, which will be setting the tone for the market. Are we truly easing? Can the Fed be more dovish and potentially start cutting rates, or is this going to be a 2025 story? Then we'll be looking at some price data that will be coming out and some other economic news coming out of China and Japan overseas. But last but not least, we get into Thursday and Friday. We're starting to get into earnings again. We got major financials. They always start off earnings season. That's going to be coming out on Friday, pre-market from JP Morgan, Wells Fargo, Citigroup, so on and so forth. Jeremy?
Gotcha. Well, thank you, Graham. I had a question for you. So I know that we're kind of in our mid-year here, and I know you discussed in our webinar at the end of June from our second quarter about some concentration in the market. What do you see going forward the rest of the year?
Well, I'd like to believe it's going to continue to expand out. We think it will. As we move closer to the point of lowering from the Fed, if not lowering. But let's be careful what we ask for. If the Fed gets aggressive in lowering interest rates, that might be a signal that the economy is slowing too much, and they need to prepare for that. So you kind of want this little happy area that we're in right now, if that's a decent economic phrase. But I think one thing that we brought up in the Lunch and Learn, we talked about concentration, and I think it's pretty interesting. We are still very concentrated. The S&P is up just over 15%, but let's think about that. That's about 800 odd points. 78% of that is one stock. That's NVIDIA. That's that AI chip. 12% of that 800-point rally is Microsoft. Look at the difference between NVIDIA and Microsoft. Then it's followed by Meta, Apple, and Amazon. Those leaders there and those magnificent 7, some of those names rounding out about 9% on average. If we also think about this, 58% of the S&P is up on the year, but 42%, almost half, is down on the year. So yes, we've broadened out, but we haven't had a huge broadening out. Like, we really have great income on bonds, but we haven't really had a lot of appreciation on the bonds. Maybe some high yield bonds up about 4% and so on and so forth. But there could be a bit more room for that to go if rates are coming down for appropriate reasons.
Gotcha. Well, we always appreciate the information, Graham.
got it.
And to our listeners, we do have our retirement planning today classes coming up here in August. The first one starts on Thursday, August 15th. And then Saturday, August 17th. So just check out our website or give us a call here at the office. We'll be glad to kind of get you set up with that or to help out a friend or neighbor. So again, we appreciate appreciate y'all joining us, and we'll see you next week.
Take care.